Good morning, everybody. This is Dave Fry, ETF Digest, with an ETF in focus. We're looking at China, FXI, which one is the large cap ETF provided by iShares. We're looking at this on a weekly chart basis. What's happening now is that last night, China posted PMI, the Purchasing Managers Index, at 48.3 versus 49.5, which is a negative number. And of course, that throws a lot of weight around to emerging markets. So China is leading that area or sector of the markets higher or lower. So you can see on this weekly chart, we have a relative strength index, we have a MACD histogram moving average, a money flow index, and of course our proprietary high-low indicators and two moving averages, 5 and 10. You can see this previous high going all the way back to September of 2013, and this indicator worked reasonably well in calling a intermediate top, and you can see from that strike period, we would have been out on the 20th week of the 20th of September, and we went mostly down from there as we got into early November. Then we had a rally, which we may have gotten long in, and then of course it declined consistently all the way until we had this very good low indicator pop up here the week of February 7th, and we rallied. Last night, the news was not good as the Purchasing Managers Index in China fell from 49.5 to 48.3. This then casts a giant shadow negatively over emerging markets, which are so dependent on strong China growth. I'll say one thing about FXI. You could have been invested as a long-term investor, buy and hold with FXI for the last 3 or 4 years and not made anything. That's why in this particular case, it's been better to trade it. If you'd like to see more of our detailed charts with actionable alerts, sign up and become a premium member at the ETF Digest. Thanks for watching.